Yo, yo, yo. Welcome back to the channel. Today I'm going to do a change of pace. I know it's the weekend, so maybe we don't have to talk about AMC, stuff like that. I mean, there's always something to talk about, right? But I just wanted to pop in and kind of break down something that I was looking at with Shiba Inu because it's kind of the hot thing to talk about nowadays. And I just kind of was messing around with it. And yesterday was able to get a good amount of profit here, and nothing in this video is financial or trading advice or anything like that. It's just something that I've been looking at on the channel. So for returning viewers, it might be something useful to take note of and kind of see how these patterns can be playing out. So if you've been watching the channel, I've been talking a lot about Wyckoff lately. And I actually use a diverse set of different trading strategies or charting strategies to come up with my technical analysis. And so I just wanted to break down kind of what I was looking at with Shiba, but just to show you what I was looking at. First, I tweeted this out. It's the Wyckoff Accumulation Schematic 2, and that was just the example. And I tweeted right around here in like the October 7th region. It was like late October 7th or early October 8th. Yeah, probably like late October 7th. And I just identified these two spots in the chart. So I'll show you. Here, this is when I identified that this pattern could potentially be playing out. Let me see again. And based on this, I used this schematic that you see here on your screen to actually enter at these lows down here. Just not anything like too crazy, just like, a little bit of skin in the game, just so that I could kind of watch it play out. I also put this in my Discord, and I know it might be a little hard to see, but basically I said I believe SHIB is about to have another run, but we have to be careful fib extension levels, careful at fib extension levels that they don't create a classic bubble chart, or if you're familiar, the Wall Street cheat sheet. I'll show you an example of it. Look for key levels and know they can act as resistance. Think like the big boys. So basically, if you're not familiar with Wyckoff, it's basically just the idea that institutions control the price of assets by creating these accumulation and distribution times. So you can see here, like at the top, you would see distribution. And then you can see accumulation happen here. And I'm going to break this down in further detail for you guys. And then potentially what I think is distribution again here at this current state. And this is why I'm currently bearish on Shiba Inu. So let's break down. Let's just look at, I'll show you the Wall Street cheat sheet like I said I would. So this is just an example of the Wall Street cheat sheet. Basically, if you look at like the Bitcoin chart in 2017, you see this euphoria phase all the way to the top, bounces back down, comes up. People start to think, oh, this is just the beginning of another run up, and then it crashes down. And if you look at where I drew this line, I can barely see it myself, but I'll tell you. Well, I can draw the fib. So let's just do that, and we'll full screen this. So let me take all this off the screen right quick. Sorry. Oh, and don't tell me that that I don't have to say I'm sorry or whatever. That's what I want to say, so I'm gonna say it. I'm just kidding. It's a meme. I'm sorry about that too. All right. So the way that I measured these extensions was I took this top, I believe, and this bottom. Maybe? Pretty sure. And then I basically just drew a line that was right around this region. It would have been here. So you can see that using the Fibonacci extension, and we'll talk about that in another video or something, I was able to get this within, like, I don't know, what is this? Couple percent points? Yeah, like, what is this? Like under 1%. All right, so I missed the top by under 1% using that method. All right, so let's get into the accumulation that played out. Just show you what I was looking at and kind of describe what's going on there. So these are the liquidity zones that I believe exist. Basically, you have your support and resistance lines that institutions we've seen buying and now selling and I'll show you in more detail. So let's just put this one away for now. And we'll just look at the accumulation, break that down, and then we'll talk about the distribution that I think we're in now. So with Wyckoff accumulation, and I can bring a schematic up on screen so you can follow along, you have this pattern that basically plays out whenever institutions are accumulating the asset, like we discussed before, right? You have your primary sell-off, your sell climax, your automatic retest. So you sell out of this liquidity zone into this potential new one, sell climax. And the reason that I knew that this was going to be a sell climax is because this thing bounced right up off of this, right? So I was like, okay, maybe this is a sell climax and we're starting accumulation here. Then you have your automatic retest of the previous liquidity zone, which we know is the previous liquidity zone, because it came up here, it tested this zone, and then it went straight back down. Then you have a sell test. Oh, snap. I hope you guys can see all that. I think you could see all of it, though. Then you have your sell test, which is basically, as you can see in the schematic, at the end of phase A, you test right above that liquidity zone, and then you go up for your automatic retest in phase B. I'll show you here. Okay, this is better. Then you come down for your sell test in phase B. This is typically lower than the sale climax, and it doesn't have to be exact. It's just a general idea of this playing out and what phase B represents versus what phase C represents versus what phase D represents, etc. So we came down, we tested lower, the bottom of this this accumulation zone. Then we came up for an automatic retest again, came back down, tested the region again, and then we went into our LPS, which is the last point of support. We did LPS again, last point of support, as you can see in the schematic. And then we came up for a sign of strength where we break above the upper liquidity zone, the resistance zone, and then we back up and do another last point of support, boom, and then we blow up here. So again, this is kind of that price target that I was talking about, right? Like we said, I missed it within a percent. But what I was doing and the way that I was treating it, and again, this isn't financial or trading advice. I'm just analyzing the chart and telling you what I did, was I was buying down here in this accumulation zone. And then once I saw this pop up, I took a little bit of profit. Kind of wanted to see what direction it was going to go, see if it was going to climb higher and higher. And what I believe ended up happening is, in actuality, we began a distribution schematic. And I'll break that down for you. Again, distribution, this is where institutions begin to take profits. And the reason that they start to do this maybe is because they don't see the strength in the play after their accumulation. They say, okay, we're not getting a lot of buying pressure from retail, perhaps, because that's how they get their liquidity, right? So they're going to say, okay, well, maybe it's time for us to go ahead and start trying to take profit here, and sell the asset by pumping it up in price, getting people excited about it, and then knocking the price down again. Let me take this one off, clean up the chart a little bit so it's easier. And I'll pull up the distribution schematic. And again, it doesn't have to be exact, but it's just the concept that you want to take up here. So PSY, buying climax. Then you have your automatic retest here. Your sell test, come down, upper test, and I don't know what the other definitions are for the distribution schematic. All right, bear with me. This is a relatively new concept to me, but it's actually working. It's working out pretty well. So then I'd imagine this. I mean, I can pull up the definitions. Like icon distribution schematic. Let's pull it up. And you can look into all this in this website. I think it's stock charts. Yeah, stockcharts.com. Let's do that. Let's do this. Move this out of the way. Move this here, vertical like this. Okay, cool. Let's look at how's you guys' weekend going so far. Hope it's going well. Okay, so preliminary supply. I'm gonna link this in the description as well, so you guys can go check it out for yourself. But Oh, let me take the schematic off. We don't need it, do we? So, preliminary supply, where large interests begin to unload shares in quantity after a pronounced move up. Volume expands and price spread widens, signaling that a change in trend may be approaching. Ooh, it sounds so dramatic. Buying climax. Um, Obviously, this is like they're peaking the price. Let's just hurry up. Automatic reaction, which is the sell off, right? So you have this big peak into this supply zone. Yeah, supply zone. And then boom, you come down, you automatically react, and you come down to this other liquidity zone from the previous schematic. You have a secondary test, which is right here. Let's pull up that schematic so you can see. So secondary test, right? You come up, you test in the region. Maybe it's here. And again, it doesn't have to be exact. It doesn't have to match the schematic exactly. It's more about the idea and what's going on. What's UT? UT is up thrust. Boom. Right? Come down for your sign of weakness. Observable in a down move to or slightly past the lower boundary. Usually occurring on increased spread and volume. The automatic retest and the initial sign of weakness indicate a change of character in the price action of the stock. Supply is now dominant. Then you come up thrust after distribution. So all of this is distribution, right? So institutions, they'll come up, test this liquidity zone, sell it down. Maybe they'll buy again here to put the price up again, sell off again. And then you have that up thrust after distribution. And then last point of supply. So this is when they begin to sell off. And then your final sign of weakness here. And you can take a look at the schematic. Obviously, you can go back in the video as well and talk, go through these concepts and what's going on. So I would say that we're likely coming into phase E with this distribution. So what I would expect, and again, this isn't trading advice, not financial advice. I say it over and over. It's just because whatever. I don't want, you know what I'm saying. You know what I'm saying? All right, let's see. Let me get my, liquidity zones up. Boom. What I would expect is you see somewhat of a violent sell-off here in the short term. And it could happen. It could trade around here for a while and then come down. And what I would be more expectant of, you see this more aggressive, boom, straight down into this liquidity zone. And then either you're going to continue accumulating here, or maybe you'll break down, and then you'll find another zone of support. Right? Perhaps here, like a heavily traded region. And you'll see maybe another accumulation play out, maybe another distribution play out, et cetera, and it'll keep going on and on. So yeah, this is just kind of an educational breakdown of what I saw with Wyckoff in Shiba Inu. And I mean, it's a very useful strategy or useful way to look at the market, I should say. And saying, hey, look, whales and big players, they see an opportunity in something because there's a lot of retail interest. They think that a lot of people will buy it, and then a lot of people basically will provide liquidity for them by buying at the top and then selling at the bottom. If they can freak people out, they get them to sell off down here while they're buying cheap, and then they sell off here again. And then that's how, I mean, that's one way that you can get this this bubble chart that we talked about earlier. I don't know where that tweet's at. I probably got rid of it by now, but you remember the Wall Street cheat sheet. And yeah, that kind of wraps up the video. So I hope you found this video educational, informational, whatever, you got something out of it. It was relatively entertaining. Hopefully I didn't use too many vocal crutches. I probably did, though. If you enjoyed this content, make sure that you subscribe to the channel and turn on post notifications. I upload pretty much every day, breaking down these sorts of ideas, talking about different analysis strategies and stuff like that. So go ahead and subscribe. I also have a Discord channel in the description down below. as well as my Twitter handle. And also, if you want to use the program that I'm using, I use TradingView. I have an affiliate link down in the description below. If you sign up there, I get commission if you do a premium, but you can also just do it for free using that link and it tracks it. I don't get any commission for that, but it's pretty cool because you can actually take your charts with you. So if you chart on your computer and then you save your chart, you can actually pick up where you left off on mobile. You can keep up with what's going on throughout the day while you're out and about. That's actually how I mostly use TradingView, is on mobile. And then whenever I want to do videos or I want to, you know, really sit down and do some longer term stuff or something like that, I'll sit down on my computer. So that's pretty much it. Hopefully you enjoy the video, and I'll catch you next time. Would you look at that Shiba Inu? That's Shiba Inu right there. That's Shiba Inu chart. Sure does look like a bubble chart, though. My opinion, not financial advice, but dang, look at those gains. You know, this all came from Elon tweeting out a picture of a dog, right? Isn't that crazy? 2021, man, you can't make it up. All right, guys, take it easy.